Here with you for Arcadia Economics, and I'm quite excited because, fortunately, once again, I'm joined by Jorge Ganoza, the CEO of Fortuna Mining. And Fortuna just had their second quarter earnings released last Wednesday after the close. Interesting reaction in the stock price, which we will certainly dig into amongst a handful of other developments at the company. And Jorge, it's great to see you again. It feels like it's been too long, although I've really come to enjoy these calls. It's been exciting following the transition of the company over the past couple of years, where much different company than even 3, 4, 5 years ago, and a lot that has been happening. So great to have you on here today. And most importantly, before we get started, how are you doing today, my friend?
Chris, first, thank you for the invitation and the opportunity to speak to your audience. We're doing great. No, it's been lots of work, lots of things happening, and I'll be, happy to share them with your audience.
Well, I know there are a lot of people looking forward to hearing from you, especially as people are aware there was a big move down in the stock price after the earnings were released. We'll cover that. There's been some happy news upward. I think as the market has been digesting things, and Jorge, before we started, I was saying in some level we've almost seen this every quarter that no matter what, I mean, it was one quarter record free cash flow, the stock was down 10%, yet it seems that by the time the next set of numbers are released, especially over this past year or two, stock prices alpha and rebounded quite well, and we'll touch on all of that. But here we have the second quarter earnings. 14 cents per share, which was an increase of 3 cents per share relative to the previous quarter. And perhaps you could just walk us through the highlights, especially anything that stood out to you as we dig into the second quarter of 2025.
Yes, absolutely. But if you allow me, Chris, before we get into the numbers of the second quarter, I want to step back and talk about where we're going as a company because the results we'll be discussing are part of a much bigger story, right? Um for the benefit of your audience, we have a clear strategy to consolidate Fortuna as a 500,000 ounce producer with competitive costs, with long life of mines supported by, uh, healthy mineral reserves and anchored in Latin America and West Africa. No? So roughly that's our master plan here. And so Q2 was an important quarter of strategic streamlining. And what do I mean by that? We completed the sale of our two short life of mine or two mines with short life of reserves, right? Which temporarily reduces our annual production to about 330,000 ounces per year from our peak, which was 2024, where we delivered for the year 460,000 ounces of gold, right? So that might seem like a step back in the short term, but it's really a step forward in the long term because it focuses our portfolio on assets, on mines with long life of reserves, stronger margins, lower risks. And additionally, we relocate approximately $50 million, which were supposed to go into mine closures. On top of that, management time and dedication, because each mine closure is a project. So by divesting of the two mines, we can refocus that capital and refocus that management time into, I say, to make an American football analogy, from playing defense to playing offense, right? And that's where we want to be. Uh, and here is what I want you to have as a takeaway, you and your audience, is that we have a clear, fully funded path to get back to the 500,000 ounces per year of annual production. But more importantly, it's fully under our control.
Yeah.
right? Because we're expanding the Seguela mine, which is our flagship asset. We already provided guidance on that expansion, and that mine is going from the current 140,000 ounces of gold annually to about 170, 180. And then, as we just recently announced, the Diamba Sud project has reached the million ounce mark in total resources. And we're advancing on several fronts, permitting, engineering, continued exploration, and we're looking forward to a construction decision next year, right? So those are projects that we control, and we're moving them forward towards our strategic objective, in support of our strategic objective. And the other important thing is that we're confident because, again, as I said, these projects are within our control, and we have an exceptionally strong financial position, which I'm sure we're going to talk about when we dig into the details of the quarter. We have over $430 million of liquidity today available to the company. If we service all of our debt, which is small, we're still net cash positive north of $200 million and growing every quarter. So that means that we can invest in growth or in the projects that we choose, um, without adding any financial risk to the company. And we do not need to make acquisitions to reach our target. If we decide to enter into a transaction to acquire a company or project, it is because we see deep value, because we're chasing value. We do not need to chase ounces. We can source the ounces organically, as I just described, right? So, I think this is important to have in mind, because again, the quarter is marked by the closing of the sale of two mines that were important in our portfolio for many years,
Yeah.
and we decided to divest of them, but because we have a clear path forward for bigger and better, right?
Yeah, I'm sorry, I wasn't sure if you were finished there or not.
Yes, I am.
Okay. Yeah, I remember the last call in particular after we had seen, guess, hadn't officially closed the sale of those two assets. And obviously, one of the questions people had, they heard the 500,000 ounce per year mark. And now that those two were removed, you talked about how, yeah, you could go out, buy another mine, get it up to 500,000 per ounce, yet it's not just getting to 500,000, but also getting low cost ounces. So the manner of how you get there. Now I get that Wall Street, the way our financial system works today, they see the headline piece of data and respond. Yet perhaps you could just touch a little more on what you just said, because with the cash position you have, that you've removed a lot of the risk, and certainly in mining, which is traditionally incredibly risky, I think that I don't want that to get lost. If you think of it, the floor that you've put under the company by removing some of that risk, and perhaps you could just touch on that a bit more.
Mining is a capital intensive business, right? And each time we decide to advance a project, it requires, time and capital and expertise and all of that good stuff. Coming out of a capital intensive phase, which for us was the expansion of the business into West Africa in 2021, subsequently the decision to build the Seguela mine, which was completed on time, on budget in mid 2023, we set a priority for us, simple one: put together a fortress balance sheet. Let's go into a harvest mode and put together a very strong balance sheet. I say a fortress balance sheet. And we have delivered that. I think if you look at our peer group, we probably have one of the better balance sheets out there. So that gives us confidence as we look to deploy capital for organic growth, or if we see, value opportunities out there, to pursue them to do it with confidence because we're not compromising the company in any way, right? We have removed the financial risk from our growth decisions, right? In large part. So that gives us confidence, a lot of confidence moving forward, right? And it's the outcome of all the decisions and good work the team has done over the last couple of years, right? So today, with the second quarter results, we're showing that we continue building on that financial strength or production. We delivered 71,000 ounces of gold from continuing operations, which keeps us on track to meet guidance for the year. Our all-in sustaining cost is looking elevated in 2020 in the second quarter, but it's just a function of timing of capital expenses and stripping. We're removing waste at our pits so we can enable the expansion and growth in production of our Seguela mine into next year. And the Lindero mine also had in H1 a peak in strip ratio that's coming down. So our mines are gravitating Lindero towards a low $1,500 per ounce AISC by the end of the year. And Seguela will remain with an elevated AISC, but setting itself up for a very strong 2026.
Yeah, and I believe on the conference call last week, because obviously that was one of the things that came up, seeing the higher AISC. I believe you also said Seguela you're expecting will start coming down in the fourth quarter.
No, the Seguela AISC starts coming down slightly back down in the fourth quarter, but really the setup is for 2026,
Okay.
right? The one that's coming down after, capital intensive 2 years is Lindero. We expanded the leach pad, as you might recall,
Right.
and in the first half of the year, we also had a peak stripping at our pit. And all of that is behind us now. So we're seeing the all-in sustaining cost gravitating towards the $1,500 per ounce level, which is a very competitive all-in sustaining cost today for the industry. You've been at that mine, you've seen it, you've seen the work that the team is doing in operational discipline, capturing opportunities, keeping the cost low. So all of that is rendering fruit now at that mine, yeah.
Yeah, and I have perhaps towards the end of our call, I made my video of my tour of Lindero from earlier this year, and
I seen it, yes.
yeah, it was fun to be there and see. And Jorge, one of the things I definitely want to touch on is the liquidity position because I know people, obviously, the next question that comes up, well, what are we going to do with this? Although, wanted to give you a chance if there were any of the other operational highlights regarding the second quarter before we get to that.
No, operationally, it's just business as usual. And as I said, our consolidated AISC is going through a hump, driven by just planned stripping and the timing on capital investments that we're making at our mines. So, no, nothing of concern. It's temporary. And Lindero is already set up for lower costs this year, and Seguela is setting itself up for a very competitive in terms of annual production and cost 2026, right?
Okay, and real quick before we get to the liquidity position, just would like to highlight this so that people can see it. Here's the stock price had quite a rally leading up into earnings. Here we are following earnings, the big drop, and interesting today that we're back over just 9/10 of a penny over $7. This is a pattern we've seen repeated several times. I believe this was the last earnings right there, and one of the things that stood out to me that I think is helpful for investors, and perhaps you could touch on again here, is that people log into your conference call and they're saying, "Hey, what happened? Was this bad news?" And You sit there pretty much every quarter, say, I think maybe the market is not quite understanding what we're doing because we've been achieving our plan, which has.
You know, I think if you allow me, on the mining equity space, I think there is a shortage of investors. And we're seeing a lot of quant algorithm trading, right? Trading on headlines, trading on momentum. Uh, we're seeing a lot of that. And not a lot of investors, no? Guys who look at or approach investing in a more fundamental way, no? Institutions. Uh, so, it is what it is. It's a reality. All this momentum trading, algorithm trading, feeds on the headlines and whatnot. Uh, but as you well shown, no, what happens is that the stock gets sold off and it recovers in the next 2, 3 sessions, and it's becoming a bit of a pattern. Uh, but as I said in the call, in 20 years, I have never seen Fortuna as strong and with the growth prospects that we have today. I think, yeah. And for example, we had a miss on earnings. Our earnings per share came in at 14 cents versus the street consensus was sitting at around 18 cents per share, right? So that's a miss. Now, as we explained in our news release and during the call, the miss is driven by the fact that we declared full year dividends for the first time in at our Seguela mine in Cote d'Ivoire. By doing that, what happens is that you have to declare and accrue the withholding taxes on that dividend in one quarter, just accounting rules, no? So all of that was not necessarily captured or factored in by the analysts. And the accrual of that withholding tax on dividends in Cote d'Ivoire alone was 6 cents. So let's say if you adjust for those 6 cents, we came in at 20 cents when the street consensus was 18, right? So I think that was well understood by several analysts who put out positive notes. But the headline is, 14 cents and consensus is at 18. Well, there is an explanation to that, but the business was very strong. We had, in spite of the high AISC, I think our costs are down. We're operating our mines at a cash cost, not AISC, but cash cost, sub $1,000 per ounce, which in today's world, I think is very competitive. And what we have take driving our AISC is just waste stripping in our mines and timing on capital investment. So and all of that is feeding growth into next year. So I mean, there is no free lunch, right? You want to grow, you need to invest, right?
Yeah, and certainly you've been doing that, have some drilling ongoing, all of which we will touch on. But let's get to that liquidity position, which in the press release mentioned at 537 million. We'll touch on Diamba Sud and also something you've mentioned before that you have a very nice portfolio of prospects still to go at Seguela, but if you could touch on the liquidity position, and I'll just ask the question that you saw you got last week, and I know a lot of people are wondering, okay, well they have this amount of cash. Are they looking for an acquisition? Obviously, there's if you were, I guess it's limited, you can say, but anything along those lines of what you could respond to that question for investors.
Yeah, we have $500 million worth of liquidity available to us. And as I explained at the beginning of our talk here, Chris, our priority is organic growth because we control our future there. We have control of our destiny. And that's a luxury. We have the Seguela expansion and the Diamba Sud project moving nicely forward with good exploration results. We have a construction decision in the horizon next year. So that's our first priority to deploy capital because that's where we can deliver the most value to our shareholders, right?
Yep.
Having said that, we're always looking for opportunities, particularly in West Africa and Latin America, but we are chasing value, and I want you to take this. We're chasing value, not ounces. I don't need ounces. Why I don't? Because as I explained, I have the capacity to deliver the ounces organically in Diamba Sud and Seguela. So that's the cheapest ounces I can give to my shareholders. And if we find a deep value opportunity out there, well, we have also the financial means with that strong balance sheet to pursue it, right?
That makes sense. And one slight tangent here, if we may, but I think this touches on a few things people are wondering about these days. Obviously, you had San Jose, which was in Mexico. And obviously, we have the conditions in Mexico less than certain these days. But in a general sense, is Mexico still an area that you would look at? And any thoughts on the environment there based on the current climate?
Short answer is yes. We have active exploration in Mexico today. I think we all know that the previous administration was in many ways adverse to mining, and the new administration is certainly more sensical and technical in its approach to the industry. So I think we're all cautiously optimistic about the future, the continued success of mining in Mexico, which is a country with a long and proud mining tradition, right? But in short, we continue seeing Mexico as a place where we would like to do business. And we are very, cautiously optimistic about the changes under the new administration.
Okay, well, I appreciate that. And I know that's something that people often wonder about. So thank you. Excuse me. But our next question, I have a friend named Dave who I think might be watching at home today. And we will get to what is always on his mind because you, right before the earnings, I'm going to pull that up. You had an updated mineral resource at Diamba Sud. And you mentioned, in addition to having a PA on track for the fourth quarter, which year goes by quickly, but we're not all that far off from that. Talked about a construction decision in the first half of 2026, and anything you could fill us in on there.
Yes, talk about the importance of a process. We acquired Diamba Sud in mid-2023. The transaction was closed in September of 2023. And we immediately launched into exploration. And really, it has taken all of 2024 and this first half of 2025 for us really to understand the deposit. It's not an easy geology, it's not a simple geology. So we have done a lot of drilling in 2024 to enhance our understanding of the deposit, to truth what the previous owners had done, and really gain that first-hand understanding and ownership of the geology, right? All of that has taken, from September, October 2023 until the end of 2024, when we delivered a first resource. And the outcome of that first resource was a shrinkage in resources. We made the deposit, the historic resource that was there, we made it smaller because we're more conservative. We are applying our new understanding and whatnot. Now, with that understanding, we gone back to drilling. And I want to highlight that with that renewed understanding of the geology, in 6 months, we have grown the indicated resource 50% and the inferred resource 90%. But that's just on the basis of enhanced knowledge and understanding, first-hand understanding. It has taken us a year and a half to get there. It's not a simple deposit, right? So And we are going to be reporting additional resources for the Diamba Sud soon. The at market open, we're going to be on Wednesday, we're going to be publishing additional results. Look for that that are consistent with what we've been seeing, which is enhanced open areas of mineralization, and we understand it better. That means we can follow it, pursue it better, and I think we are gonna get past. We have a fair chance to get past that 1 million ounce mark. Absolutely, and that is giving us encouragement to advance with renewed enthusiasm all of our permitting and engineering work, citing a construction decision next year.
Okay. And obviously, you've mentioned the 1 million ounce mark several times, although just to make sure everyone's clear on that, is that getting the indicated up above 1 million?
I mean, between indicated and inferred, we're currently standing at about 1 million. Now, the exchange doesn't like us to pile those two. So right now, or the focus of our exploration program is on continued expanding the resources and then infilling those 285,000 ounces to upgrade them to an indicated category, right? So we have two programs in parallel, giving more certainty to the inferred and continue expanding. Right now, the drilling has taken a pause because of the weather, the rainfall season, rainy season, and we're probably gonna start again late September, October.
Okay. And I think it was after our last call when you had some drilling results, which we will get to in just a moment, although touched on the construction decision. But let's say I had a friend Dave name here. Anything additional that obviously you'll make the decision when you make it, but anything that would be a key component that could impact that decision that is on your mind you're thinking about now?
I mean, the news flow for Diamba Sud, look forward for continued results. We're not drilling right now anymore because we're in this rainy season pause that we're taking right now, but you'll see results continuing to come from our last drill holes. Second, end of October, early September at the latest, we should be publishing a PEA, a preliminary economic assessment based on those 1 million ounces, and straight moving into a definitive feasibility study and a construction decision next year, right? So that's the path. And consistent with that, you should see the news flow that accompanies that work, right?
Okay.
Exploration drilling will not stop. We will continue drilling nonstop because we have lots of opportunity to make this bigger and better. We just need the drilling to take place and a bit of luck with the drill bit.
All right, that makes sense. And I'll just highlight for people, A, that the link to the earnings press release is in the description field below if you'd like to take a closer look. But as Jorge has mentioned, the exploration drilling going to be infill drilling to upgrade the inferred resource and also expansion drilling where the mineralization remains open at shallow depths. And Jorge, we did have some drill results back in late May. So I know many people have seen these already, but 8.6 grams per ton over 13.6 meters at Southern Arc, where you're continuing your drilling. Anything you could highlight from what you've seen already so far?
Yes, Southern Arc was a soil anomaly, gold in soil anomaly outlined by the previous owners. It has some light drilling in the periphery with nothing to show for. And it is based again on this renewed understanding of the geology that we've been able to come back here and drill test it again. And we're finding the kind of mineralization that you show here in the news release, wide widths with high grade gold. So it's also near surface, when you're, you know, tens of meters, 10, 20, 30, 40, 50 meters below surface. wide, simple metallurgy so far. So no, it's a project that has a lot of good things, and the Senegalese government is supportive. So we're finding it very encouraging, all of it.
And I'm curious, I think we may have talked about this last time, but would you say that it's pretty much been in line with what you might have expected when you did the deal, or above, or slightly below, or how does it match what you were
No, I
thinking it
think
might
it's
be?
taken a bit more time. I think time, if I have to say something, w- w- we thought we would be where we find ourselves today, probably 6, 8 months before,
All right.
no? But as I explained, when we digged into the geology and the mineral controls of mineralization, we found more complexity than originally anticipated. And it is what it is, right? But I think we don't have all the questions answered yet. But we are comfortable that the understanding that we have today is yielding results, and you see that in the growth in resources we've been able to generate over the past few months, right?
Yeah, and that makes sense, I suppose, in many areas of life where things often have their schedule, which is different than perhaps what we expect, yet great to see that it is continuing to move along. Now, the other area where obviously is a key focus of increasing the overall production numbers is Seguela, where right now you're mining from Antenna, Ancien, and Kula. Anything that you'd like to update in terms of the operations there? Obviously, we talked a bit about the cost structure, but anything about going forward and perhaps the next targets that you're looking to
Well,
put?
there are two very exciting things here. One is the production growth that we already discussed, where this mine is going from 140,000 ounces of annual gold production, moving up to a range of 160, 180,000 ounces of annual gold production, right? And that's on the cards. We have already provided the market with that guidance for 2026. So that's exciting to us, and the team is very focused on delivering that. And the second one is exploration, because we continue making exciting discoveries at in the Seguela camp. I call it a camp because we control 35 kilometers along the belt, and we have the Kingfisher discovery, and we have the Sunbird discovery, which is a discovery we made over 2, 3 years ago now, but continues to grow. Now we are developing a case for underground mining following deeper, higher grade mineralization at Sunbird, right? And Sunbird is shaping up to be the largest gold deposit in the Seguela camp. So a lot of good things on the exploration side. And I believe we're only starting to also understand the full potential of all of that belt.
Yeah, and I would imagine that's pretty helpful going back to what you talked about earlier, where, you're out looking and evaluating opportunities, but it's almost like you have this in the background helps you to raise the bar and be able to pass on anything that isn't really a good asset that fits with what you're doing.
As our business is an ever depleting business, every gold we mine is gold that comes out of the ground, and we need to replace it. And, that's what makes mining challenging compared to other industries. It's an ever depleting business, right? We're always depleting our business. So this urgency to replace, and not only replace, but you need to replace, and if you want to grow your business, you need to replace and find more. So that is our continued challenge, and we're in this very strong position where organically, I believe we have the means to deal with the depletion and source additional growth. And that's unique. It's not always in Fortuna that we saw ourselves in that position, right? But today, I feel very comfortable that the growth of the company right now is something we control.
Yeah, and one question along those lines, you've talked plenty about how mill is already running over nameplate capacity. So is there a scenario where if you keep finding deposits that you want to bring into production, is there a limit there? And if you reach that limit, what would happen in that scenario?
Well, that decision to expand or not to expand will be driven by the size of the resources, right? I believe that today, what we have in our plans is adequately sourced to the size of the resources we have right now and we see in the immediate pipeline, right? So to go beyond that, we would need to see additional exploration success. Personally, I am very upbeat about the opportunities that we have to create that pipeline of more growth. But I have to say that today our mine seems adequately sized to what we have in resource inventory and in the immediate pipeline.
Okay, so you could fill what's in the pipeline without necessarily a heavy capital expenditure.
Yes, yes.
All right. And we do have a few comments from our audience watching live today about Sunbird, which certainly they've heard plenty about. And could you just give us a timeline of known events and steps before we see movement forward in production?
Sunbird is going through its permitting already. We have incorporated the near surface portion of Sunbird into our mineral resources, mineral reserves, right? So it's feeding our mine plans. But the new component to Sunbird is going underground. And that is not currently in our resources reserves. So we look forward to publish on that. And again, in considering the underground potential, I believe Sunbird will likely be the largest single deposit in the Seguela camp as we know it today.
Well, it's certainly exciting to hear, and I know people are looking forward to that. For their next one, I have a clip here. This is actually from our last call. This was something I thought was particularly impactful. It's about 30 seconds. I'll play that for you here, and perhaps you could add any comment on or how this has progressed going forward. But here we go.
We went from record to record. In Q4 2024, we had record free cash flow of $96 million. And into Q1 of 2025, we reported, as pointed in the news release, record again in free cash flow of $111 million. That means we increased our free cash flow margin quarter over quarter from 31% to 38%. That's margin of free cash flow over sales.
Which I think speaks to what you were talking about earlier of not just wanting to throw additional ounces to reach a particular production number, but do so rather strategically. And anything that you would add or update to that today?
I'm very keen on margins. I'm very keen on margins. I'll stick with the last I pointed out. Uh, you can look at the margins of the business on different metrics. Uh, there are some guys who, like Warren Buffett, hate EBITDA, adjusted EBITDA. And sometimes I speak about EBITDA, and people go like, "Well, I don't like EBITDA." I think EBITDA is just one more metric that is a reflection of the business, and in mining sometimes it's useful. So our EBITDA margin reached a historic record of 56%, or in the second quarter. In the first quarter, our EBITDA margin was 50%, right? Our operating margin, right? Operating income over sales stood in the second quarter at 36%. up from 28% in the first quarter of the year. So quarter over quarter, our operating margin went from 28% to 36, and our EBITDA margin went from 50 to 55%, right? So I think that's the key here, no? Being able to continue capturing the margin opportunities that higher prices provide. And you can not only bank on higher prices to save the day, we have to do our homework, right? We have to continue with operational discipline, keep our costs down, and whatnot, invest in the business with discipline. And I think we're doing all of that.
Yeah, well, maybe we need to put some of those margins in the headline of the next earning, make it easier for the average banking analyst out there. Although I'll stop teasing the bankers. But yes, our next one, I guess we covered the drilling at Diamba Sud. So perhaps we could turn it over to Lindero and just anything you'd like to highlight there. Obviously, the leach pad expansion program has been completed. And I know that that has started to bring down the costs there. And anything about Lindero, and perhaps in the background here, I'll let people see what it actually looks like because there we were. And I mean, in terms of capital intensive, I'm 6'2". And I think this kind of puts a visual for people. And you had these guys crawling all over the place. Impressive operation to see there, much like I expected and much like I saw at Seguela. But anything of the ongoing operations at Lindero?
I think the key takeaway here is that the trend of our costs continues to come down, and we expect to land in the fourth quarter at around $1,500 per ounce, all-in sustaining cost, right? The team here is doing an excellent work, and it's showing. And we just need a bit more time over the next couple of quarters to see all of these opportunities materialize on the lower cost, right? So we're also excited about our drilling in Arizaro, which is a second porphyry, gold porphyry center that we have 3 kilometers away from the pit that you are seeing here in the video. And we started a drill program there. We're excited about it. We just need a bit more time to let it run and see. But lots of things happening at Lindero.
Yeah, and since we have this up here, this was the blast, which was quite fascinating to see. One of the things I thought was interesting is there was that sound delay because you see it start to blast, and there was a couple seconds before that reaches you. Anything you could just explain for people who saw this and curious how this part of the process works?
Well, we do about 1 or 2 rounds of blasting per week at the mine. These are large sections of the mine faces that we drill and blast, and some source production. The other ones are helping us with the waste stripping. Lindero is a low strip ratio mine. The life of mine strip ratio averages 1.2 to 1. That means that for every 1 ton of ore, we need to move 1.2 tons of waste. Now, in the first half of the year, because that's an average, the 1.2 is an average, in the first half of the year, our strip ratio went as high as 2, 3, right? So now it's coming down. So the leach pad is behind us, and peak stripping is behind us too. That's why we're driving costs down. But it's a very straightforward mine. The team does an excellent job. It's remote. It's remote. I'm sure you felt remote out there. It's a lunar landscape. The mine sits at an elevation of around 3,600 meters above sea level, right? It's our second highest mine in terms of elevation. Our highest mine is the Cayoma mine in Peru. the camp is at 4,500 meters above sea level, right? Yeah.
Well, it was really nice to see that. And we did have a question coming in from our live audience today asking about the share buyback program. We've commented on that before, and I'll add one part to that. Curious just the logistics of how long it takes to make a decision of when you're going to do that. So, for example, when we see a big decline after earnings, is that something that if management decides on a day-to-day basis that you're able to actively go in and anything along the lines of the share buybacks?
Yes. First, with respect to our timing of share buybacks, remember that as a company, we're also under blackouts, right? So we release the share drops. We're under a blackout for 24 hours. And we officers of the company cannot buy shares, and the company cannot buy its own shares either, right? So there are some limitations there with respect to or blackout periods and being careful with trading with insider information, of course. And the other one is we have the buyback in place. We were active at the beginning of the year, close of 2024 into 2025. We were very active with the buyback. We have slowed down because we've seen the price climbing, climbing, climbing. And with the buyback, our view is that we can be opportunistic, right? Yeah, we were buying our shares in December, January, and with the price rising, we decided to make a pause and watch it. No, so yeah.
Okay, well, that makes a lot of sense. Hopefully, that was helpful for Vinny. And the last, I have two more, one about Fortuna and one just more sector related. But here we have this was again shortly after our last call. We've completed the divestiture of Yaramoko and also San Jose. I think people are familiar with that now, but if there's anything else you'd like to comment on that process.
As I stressed at the beginning, this first at a strategic level is a streamlining of our portfolio, right? These were two mines that were important assets historically in our portfolio, both, and Yaramoko with a good present, not just historically, but Yaramoko had a good, a good margins, good present, but no life of reserves under a year. So strategically, it made all the sense in the world to divest of the assets so we can focus on the opportunities that we're discussing, Diamba Sud, Seguela expansion, Lindero cost opportunities, and things like that. So we streamline the portfolio and also at the tactical level, because there is a strategic component I just mentioned, and also at the tactical level, Chris, closing mines is not like you just turn it off and it's closed, right? Closing mines are big projects, big that require you have to manage those projects with the same energy, enthusiasm as that you deploy to build a mine, open a mine. You have to deploy the same energy to closing a mine, right? Or mine closure budget over several years would have been about $50 million plus and a lot of management attention to that as well. So that is, I say, the tactical component of the divesting of the asset. One is the strategic one. I think it checks the boxes. And then the tactical one, it checks the boxes, right? So it made all the sense in the world. And those two mines have found owners. We have found a place for them with groups that are private, that operate under a different standard and philosophy. And yeah, so I think we're on to bigger and better right now.
Okay. Yeah, I appreciate you mentioning that second part of because obviously everyone looks at the cost and how much money is being spent or not being spent, yet I think that gets overlooked. whether it's a mining company or any person individually, that you have certain amount of energy and attention in a day. And I think that seems like that worked out really well. So
Yes.
um, I know I said I only had one last Fortuna question, but I just remembered something else that I found really interesting from the conference call last week. Our friend Adrian Day asked about the balance between brownfields and greenfields exploration, and I thought your answer there was really interesting, and perhaps you could share that here as well.
You know, we have a robust portfolio of brownfields opportunities that we've been talking throughout this conversation at Seguela, Kingfisher, Sunbird, more opportunities within that land package. The same at Diamba Sud, growth at Diamba Sud. We just mentioned Arizaro at our Lindero mine. And at the same time, we have in Argentina, Rio Lindo is an exploration opportunity we don't talk much about, but it's probably the largest steam-heated hydrothermal, high-level epithermal system with the biggest, largest surface expression in the province of Salta, and we control that right now. It's early days, we don't talk much about it. In Côte d'Ivoire, north of the Barrick's Tongon mine, we have the Tongon North project, where we have kilometers of structures with identified gold in soil anomalies that we're systematically drill testing, right? In Peru, at the Cayoma mine, we have the Antacoyo and Santa Rosa projects, which are kilometers away from where our mine is. And these are targets for disseminated type gold deposits. In Mexico, we have two, three joint ventures for early stage opportunities we have just executed. And we are looking also for other opportunities in other places. We're looking at in Guinea. Uh, we have our team in Guinea in the coming weeks, looking at some opportunities. And so we're very active. Now, perhaps we don't talk enough about those because they're early stage. There is still a lot of uncertainty regarding our potential for success there or not. But as we advance those programs and we're successful, be sure that we will be telling everybody about that, right?
Yeah, and you can tell me if I'm right or not here, but I sometimes get the feeling, obviously, you're running the company, you have to be responsible for all stages. Although I always see your face light up a little differently when you're talking about the exploration, and I imagine that's part that you really enjoy.
We all come to the industry from different walks of life, right? Some of the company CEOs, for example, come from the financial side of things, some from the mining side of things, some from the project development side of things. I am originally an exploration geologist, so yes, I have a soft spot in my heart for the exploration pipeline, right? Yeah, for sure.
Yeah, well, that makes sense, and again, you have a lot of responsibilities, but I think everyone experiences that, and the things they have to do. There's some that they particularly enjoy, and appreciate you sharing
Certainly,
that.
exploration is one for me, and it's central to our business. That's where value is really created with a discovery. Nothing creates value like a discovery in the mining industry. Nothing, right? So yeah, we're all very cognizant of that here.
Well, I still remember however many times I've heard you say the value is in the drill bit, so that makes sense. And the last one for you today, and then I'll give you a chance if there's anything else you'd like to highlight that we did not cover. But I suppose for the last 2 or 3 years, we've talked about it on here. I could only imagine how many times you've heard this yourself, but all right, when are the mining stocks going to catch up? A year and a half, we saw the gold and silver prices rise. It's interesting. I was at the Rick Rule Symposium this July and last July. People were a lot happier this July because a year ago, gold and silver had been moving, not yet the mining stocks. And I think this is the first time we've talked since really not even just going into the senior, but we're now even seeing in the junior portion of the market money's coming in. And I remember you've mentioned several times that this has been one of the more severe bear markets you've seen in your career as a fourth generation miner. So just any observations you've had from conferences or people you've talked
But I will revert it back to you on one angle. What's the silver to gold ratio today?
to? Oh, I think somewhere around 90, but give me a moment and I'll get you an answer on that. But you can continue while I get my
No,
little.
but the silver gold ratio is somewhere in the 90s right now. So, I think that the market, the
Wow,
the
we're
attention,
over 100, 105 right now.
105, oof, even worse. So that means that people are continue to focus on gold and participate in the gold, purchasing gold. But in my mind, we need to start seeing that attention coming down to silver, the silver ratio coming down, and also the equities going up. And I think, you know, potentially there is, when that happens, and I believe it will, mining equities, the silver ratio will go down. Because silver price will just move up strongly, and mining equities will start moving up strongly as well. Um 105 silver to gold ratio doesn't make sense. So either gold comes down or silver goes up. And I believe fundamentally, I think there are more chances that gold will continue going up there rather than coming down in today's world because of the amount of uncertainties that we are facing on many fronts.
Yeah, I think that makes a lot of sense. Interesting. I know it was around 8 or 9 to 1 in terms of what was actually being mined per year. And then I think as of the 2024 numbers, it may have even dropped below 7 to 1, somewhere around there. But the ratio it's being mined at and the ratio it's being priced at quite different. Although we'll let the markets handle deciding that for now. And Jorge, perhaps just before we wrap up, anything that you'd like to highlight that we didn't touch on today?
No, I think this has been a very comprehensive catch up. And yeah, no, thank you again for the opportunity to share where the company is and where the company is going with your audience, Chris.
Well, I appreciate that. Although I thank you for it's been an honor to be a part of this, especially, we go to people maybe not the top of the mind, but you did the Seguela project on time and budget in the middle of 9% government inflation. God only knows what that was, real inflation. So again, congratulations. I'm also happy for you and obviously all the shareholders that of which I'm included, but that we see these reactions on the earning release, although to see the stock price rebound as quickly as it has, I'm sure that must make you feel good as well. So anyway, as we wrap up, again, you can find out more information at fortunamining.com. If you have questions that we didn't get to today, you can go to the contact tab. And of course, you can find our dear friend Carlos in there, head of investor relations, who does a great job for you guys as well. And Jorge, congratulations on another strong quarter. Seems like maybe it took a week for the markets to understand it, but here we are nonetheless. And it's just been fun following this, and look forward to catching up and doing it again soon.
Yes, and now we have to get you to Diamba Sud. So let's start working on that.
Well, I still got my yellow fever vaccination card, so I'll be
You
ready
have
to
to
go.
make best use of that now that you have it. Yes.
All right. Well, thank you, sir, and we'll look forward to catching up with you soon.
Listo.